you're just starting out, you should keep a consistent bet size. Consistent bet size leads to consistent behavior, and that leads to consistent results. I know you probably have strong feelings about whatever your favorite names are out there, from the cryptos to the Magnificent Seven, even in my world, in commodities and coffee and cocoa. But that's how you let your bias creep in. If you're sitting there saying, "Oh, I'm really bullish on AI, and so I'm going to lean towards doing that," this is what leads to regrets, right? Because if you vary your bet size and try to have too many straight trading strategies when you don't have one consistent strategy that you know you could nail every time, you're setting yourself for years. Look at the comments of the videos that I've put out there. There's one guy just wrote in, he's been struggling for 5 years. And it doesn't make me happy because I know what that's like. It didn't take me quite that long, but the feelings are the same. That's what I can identify with. So this way, if you have constant bet size, it doesn't matter how screaming bullish you think you are on something that you might not even know a lot about but are excited about, like AI, for example, or crypto. And then what happens is this: by having a constant bet size, you'll always have enough on. Because if something really tears and you don't have enough, you're going to have regret. If you put too much on and the thing goes against you, you're going to have regret. So, we talked about discipline versus regret. I'd say feel the feelings of having the discipline right now because they're trying to teach you something and they're trying to save you. Two, with that, if you're struggling, it makes no sense to try to trade 5 different setups. I know some of these online journal places are like, have your overnight, setup. Here's your morning, pre-market setup. Here's your lunchtime setup. Here's your earnings trade setup. It's too much. You're trying to be a hero. And that's a typical guy thing. Try to focus on one thing with one bet size and do that consistently for 6 months and see what your results are. Markets are always going to be there. If you're trying to be too many things, right? There's that saying, don't try to be everything to everybody. The same thing in your trading. You're going to be one style of trader. So pick the one that feels best and go with it. Stick to consistent bet sizing and watch your trading improve. When I started, I was all over the place, and I told you the story a million times. I'm not gonna repeat it here just for the purpose of saving time. But man, everything I did was wrong. I didn't have someone to give me the reassurance, though, that I was on the right track. I've talked about that too, which was a little discouraging at times. I couldn't get the validation, nor could I get reassurance from people. So I just had to kind of go by the seat of my pants. But the one thing that saved me, the one thing that kept me hopeful, and the one piece of data that led me to believe that I was onto something was that I had consistent bet sizing. And this way, if something went against me, I was like, okay, I didn't sabotage myself by trying to be a hero, right? And then if I made money, I'd say, okay, I made some money with this. Was it enough? And then I have to calibrate that with what happens when it doesn't work, which is typically how I did it. I always calibrated my position sizing to what I was willing to lose. I don't care about the winners. The winners will eventually show up if you do the same thing consistently over and over and over again. But I never really varied my bet size and try to go, back and forth or trade larger in certain circumstances. And I have the track record. So even to this day, I don't encroach and let my biases take over. And because I have a really good feel for the markets. I have, especially, in like the softs, for example. But I do notice that as soon as you start to feel the hubris, and then that becomes like, well, look at my results, therefore I must be really, really bright, therefore I should trade bigger, right? And for those of you who are smart enough to look at Kelly criteria, Kelly formula, no one can really use that as a bet size because it's impractical, and the equity drawdowns with that are usually too much for people to stomach. So, more about that perhaps in another lesson, but my thing here, for those of you who are struggling, right? And if you're making money trading already, this channel is probably not for you. So thanks for coming by, but there's the door. For the folks who this channel is for the folks who are struggling and who are enjoying the process of learning their craft, it's going to come down to consistent behavior. As much as you want the results tomorrow, it's going to take time. And the way that you get the results that you think you want today is going to come from you doing the same damn boring thing every day. And that's why the pros, folks like me And then the guys who are a generation above me say good trading is boring. Why? Because there's nothing to think about. You do the same damn thing. You see your setup, you know what your risk unit is, you put the orders in. That's all there is to it. There's not a lot of sex appeal to it. Folks who are purely systematized and use mechanized trading rules have it programmed in their trading engines to calculate what their bet size is. And so that consistency is built in. You, as a discretionary trader, because I think 99% of you are discretionary chart readers, can learn so much from that process by just sticking to the same damn thing all the time. Make the trading uneventful. Don't look at your P&L and just follow your process day after day. The results will show up. They might not show up immediately. The results that you get might not give you the emotional rewards that you want. But that's not the point. That you think that is, but that's not the point. What you take solace in is your ability to do the same thing every day. That's the struggle. P&L is a function of leverage. It always has been. Entries and exits, people make a bigger deal of them. Here's my rule on entries. If it's going up, buy it. If it's going down, either liquidate your longs or short. And it doesn't get much more sophisticated than that. You can look at all the bells and the whistles and divergences and whatever, but it's overkill. When you back test it like I do against the simplest rules, like if the slope is positive, buy it. If the slope is going down, sell it short. You'd be surprised how close to getting better results you can get by keeping it very, very simple. But that's a little bit of a tangent. I want to keep pounding this in your head because it seems that a lot of you are kind of finally catching on that it's not about looking at your P&L, getting upset, and then tweaking your rules, right? You can't do that on the fly because you don't know enough. 2, no one cares what you know. It's can you execute, can you make money? That's why I don't like going up for these meetups and talk about stocks. It's like, because I don't care about anyone else's opinion. It's not that they're not good people. They're all really fun people. It's nice and to meet new people and all. But even the CFAs that I teach don't fully understand how the companies are run compared to the people who are on the inside. They are highly skilled people, but they can only see it from the outside looking in. And so their analysis has limitations. Your analysis is going to have a much greater limitation because what's your source of information? The internet, some Discord. When you think about it, when you really look at your behavior, where's your source of information and what you think you know? So that's what I mean, like become enthusiastic about AI, but you can't sell your soul to it already because it's unproven. And don't forget, things do change. Right? Kramer's 4 horsemen, they're basically dead. And the stuff that made people money in 95 to 2000, those companies have been renamed and hidden. They change their tickers. The companies bury the bad performance. They get regurgitated and get married up with somebody else. The only thing that's going to save you over decades and decades and decades is your position sizing. You make and you lose your money by your position size. So start small, use a consistent size, and then get good at your process. Once you have that down, scaling up is the easy part, right? Because now you're just changing your quantity. And by the way, when you think about R, we're going to talk about that this week. Think of it in terms of a percentage of your overall account balance. Don't think of it in terms of 50 cents or $2. You have to think about it in terms of a percentage of your overall capital. What percent are you willing to risk on any one particular trade? This will further help you understand and conjugate your actions with your feelings and your emotions and then your behavior, because they all it's like an anchored VWAP of you. You have to know how you feel. You have to know what you think, and then you need to be able to execute. So you need those 3 things in alignment. When you have constant bet sizing, you know you're playing it safe in that you're not letting your emotions get the best of you and you're not letting your biases creep into your behavior, which scuttles all your results. I've seen a million stories. I get emails every day about someone who said they thought that this was a sure thing, and they bet bigger with no particular skill, with no particular track record of being able to act consistently. They got caught up in the hype. Leave that for your relationships. If you like this video, check out these right here.